They say gold is the metal of kings. But silver? Silver is the metal of truth. And truth is dangerous. In 2020, JP Morgan paid $920 million, the largest fine in U.S. history for precious metal manipulation. 8 years of secret trades, thousands of fake orders, billions moved in seconds. But the real question isn't how they did it. It's why. Why would the world's most powerful bank risk everything to push down the price of a metal that barely makes headlines? Because silver is more than a commodity. It's a mirror. And when silver rises, it reflects something the financial system cannot allow us to see: the weakness of paper money itself. Since the beginning of civilization, silver has been money. The Roman denarius, the Spanish pieces of 8, the US silver dollar each told the same story: real value, tangible, and incorruptible. But when nations abandoned silver, they didn't just change their coins. They changed the very foundation of wealth. They replaced truth with trust, metal with promises. That's when control began. Because in a world built on debt, a metal that exposes the lie becomes a threat. If silver were allowed to trade freely, to rise with true demand, it would reveal just how fragile our money has become. That's why manipulation isn't just about profit. It's about preservation. Preserving a system where paper rules and metal obeys. Every midnight trade, every dumped contract, every spoof order isn't random chaos. It's orchestration designed to keep silver small, forgettable, contained. But silver remembers. Its story stretches back through fallen empires and forgotten currencies. And every time power tried to bury it, it rose again, shining brighter than before. To understand why they still fear this metal today, we need to go back in time. Back to when silver was the system. The year was 1873. The United States quietly passed the Coinage Act, a law so obscure that few noticed what it truly did. It ended the silver dollar. Overnight, silver was no longer money. Farmers called it the crime of 73. Because it wasn't just a change in coinage. It was the moment silver was exiled from power. Until then, America had lived on a bimetallic standard: gold and silver side by side. Both backed the dollar. Both kept money honest. But when silver was demonetized, gold stood alone. And when gold ruled, credit followed. Bankers could now expand debt without the restraint of silver's supply. By 1896, anger erupted. Populist leader William Jennings Bryan stood before the Democratic Convention and thundered, "You shall not crucify mankind upon a cross of gold." It was more than a speech. It was a warning. Bryan knew what was coming: an empire of money controlled not by miners, but by markets. Across the Atlantic, the Bank of England and the London bullion market were perfecting the art of invisible control. In 1919, the London silver fix was established. 5 men in a room decided every morning what the world's silver was worth. Not by digging it, not by trading it, but by declaring it. Behind the polished walls of finance, silver's price became a number written in ink, not carved in metal. And while nations fought wars and currencies collapsed, that small circle held the lever of value. Every empire needs an illusion. And by removing silver, they built theirs an empire of promises with no anchor, no weight, no truth. But history moves in cycles, and the world was about to witness what happens when real money tries to rise again. Because in the late 20th century, silver returned to the battlefield. And this time, it came for revenge. It began with 2 brothers, Nelson and William Hunt. Oil billionaires from Texas who believed the dollar was dying. In 1979, they started buying silver, not contracts, but physical metal. Tons of it. At their peak, they controlled over 200 million ounces, nearly half of the world's deliverable supply. By January 1980, silver prices exploded to $49.45 per ounce, a surge so fast that Wall Street panicked. The establishment called it greed. But in truth, the Hunts had exposed something far deeper. They had revealed that the paper market couldn't deliver the metal it claimed to represent. COMEX, the Commodities Exchange, intervened. Margin requirements were raised overnight. Traders were suddenly forbidden to buy more silver, only to sell. The price collapsed from $49 to $10 in weeks. Billions were lost. The Hunts were ruined. But Wall Street had learned a valuable lesson. Control the paper, and you control the metal. In the decades that followed, silver futures became a playground for institutions. By 1999, banks like JP Morgan and HSBC dominated the market, holding short positions so large they could move prices with a keystroke. Then came the digital era. High-frequency algorithms replaced traders. Spoofing, placing fake orders to trick the market, became the invisible hand of suppression. The CFTC later confirmed what everyone suspected. 87% of all manipulation cases in precious metals involved spoofing by institutional traders. 2020, JP Morgan was fined $920 million for precisely that. 8 years. Thousands of fake trades. A global pattern of deceit. Yet even after the fines, nothing changed. Because the cost of getting caught was smaller than the profit of control. And so, every midnight dump, every flash crash, every inexplicable price drop during Asia's quiet hours, they weren't mistakes. They were signals. Whispers from the machine saying, "Stay down." But markets, like history, have memory. And deep beneath the data, something was building. A pressure too real to hide behind paper. The war on silver wasn't over. It was evolving. And the true reason for it all wasn't profit anymore. It was protection. Protection of something far larger and infinitely more fragile. The illusion of money itself. To see the truth, you have to strip away the noise. Forget the charts, the talking heads, the market corrections. Follow the mechanism. It begins with paper silver contracts, derivatives, promises to deliver metal that doesn't exist. For every real ounce sitting in a vault, there are hundreds of ounces traded on screens. That's how banks hold power. They don't need to own silver. They just need to own the illusion of it. The CFTC's 2021 report admitted it plainly. 87% of manipulation cases in precious metals used spoofing fake orders designed to shape reality itself. And when those orders hit the market during thin liquidity at midnight, during holidays, they trigger waves of panic selling. Artificial fear. Real price drops. The motive? Control. Because silver doesn't just reflect industrial demand, it reflects trust. Every time silver rises, it signals weakness in paper currencies. And when that happens, faith in the dollar trembles. Look at the numbers. From 2014 to 2024, global M2 money supply grew by 6.4% every year, a tidal wave of printed debt. Yet silver's price stayed stagnant. How can a finite resource remain flat while currency supply explodes? It can't. Unless someone keeps it that way. The gold-silver ratio exposes the lie. For most of history, it sat near 15 to 1, 1 ounce of gold worth 15 of silver. In 2020, it hit 124 to 1, the highest in recorded history. That isn't a market signal. It's a distortion, a flashing red light in the system. We've seen this play before. In ancient Rome, emperors debased the denarius, replacing silver with copper to hide inflation. In 1971, Nixon severed gold's link to the dollar, setting paper free from metal, and every time the pattern repeated: short-term stability, long-term decay. Today's manipulation is just a digital version of the same ancient trick, maintaining confidence by suppressing truth. Because if silver were allowed to rise to its real value, it wouldn't just expose inflation. It would expose the entire monetary illusion. But illusions don't last forever, and cracks are already spreading. Physical demand is rising. Mining output is falling. Industrial use from solar panels to microchips is draining the vaults. The machine can fake numbers. It can't fake scarcity. And when the illusion meets reality, the result will be violent. Because this isn't just about markets anymore. It's about survival. And the clock is running out. The question is no longer if silver breaks free. It's what happens to the system when it does. The year is 2025, and the stage looks eerily familiar. Global debt has crossed $320 trillion, more than 3 times the world's GDP. Currencies inflate, wages stagnate, and nations borrow just to stand still. The illusion grows heavier. And once again, silver stands at the edge of the storm. Look closer. In 2024, solar manufacturers consumed 120 million ounces of silver. Electric vehicles, electronics, and medical tech devoured millions more. The Silver Institute warns of a third consecutive supply deficit over 140 million ounces short. Yet the price barely moved. That's not a market. That's control. Meanwhile, paper markets still dominate. Billions in synthetic silver change hands daily digital ghosts, traded at light speed. But when investors ask for delivery, the shelves run thin. The vaults echo. We've seen this before. When paper outnumbers reality, the reckoning comes fast. In 2022, the London Metal Exchange's nickel market imploded in 36 hours because physical supply couldn't match digital bets. The same fuse is burning beneath silver. History always rhymes. Before Rome collapsed, the denarius lost 90% of its silver. Before 1971, the U.S. drained Fort Knox to defend a dying gold peg. Every empire hides its decline by destroying its money. But silver remembers. It is truth in metal form, and truth cannot be printed. The banks can fine-tune algorithms. The regulators can issue fines. The media can call it volatility. But when trust in paper dies, people reach for weight, for substance, for silver. Because silver is the people's metal, the counterweight to every lie ever told in ink. And when this cycle breaks, and it will, the world won't see a price rally. It will see a reckoning. When the contracts fail to deliver, when the vaults go empty, when belief in paper finally burns out, that's when silver will speak again. Not as a trade, but as a verdict. Every empire debases its coin before it falls. And when that moment comes, silver will not whisper. It will roar.